Thank you. It's nice to be back. Actually, when I was flying in, I noticed that there was an awful lot of dry fields coming into Saskatoon. And also the temperature has been really, really warm the last little while. And the thought struck me when I was coming in is that if this doesn't change pretty soon, we're going to have a whole new definition of winter cropping in Saskatchewan and maybe get in 2 crops this year. But I understand it's going back to normal tomorrow, so it won't be a problem. I really wanted to I think Greg is going to talk a lot about the macro situation in the world and get in fairly specific about, about the markets for lentils. I wanted to maybe focus a little bit more on prices and how one can think about how they could imagine where prices would be in the future. One of the things that you need to understand is that no one can reliably predict prices. It is impossible. Several years ago, there was an academic study done which looked at all of the ways of price prediction that were in place, all the different technical measures and things like that, and all the schemes that people use to predict prices for commodities and for stock markets. They looked at the Dow Jones data for almost 100 years, and what they discovered was that you would do a better job throwing darts than you would by trying to use any of these tools, which is a very important caveat. You have to understand that markets have their own life, and I also believe that the more people try to use different sort of predictive tools, the more that thinking is incorporated into the market and it influences the price. I often describe markets as a beast, and it's made up of the sum total of the knowledge of everybody who's involved in it. In lentils, every one of you contributes to the knowledge of the market, the same as the traders do, like Greg and other people, the same as all of the buyers overseas, the domestic users, and things like that. And that becomes the consciousness of the market. So it knows at all times what's going on, but if you try to capture it and tame it, it will bite you bad. One of the things, though, that's very interesting is that commodity groups do tend to go together. I know this point has been made a couple of times today, and I created a graph that demonstrates it very, very clearly. It's an interesting thing. It is created by a lot of speculative investment or speculation in commodities, with investment funds getting involved in doing cross-commodity trading. That contributes to it. But there are also 2 other major factors that contribute to this. One is competition for land use. You are looking at all of the crops that you can grow. You're going to look at the economic opportunity of each individual crop, and you're going to make a decision on what you're going to grow based on that. I think there is a tendency, and correct me if I'm wrong, to try to make as much money as possible on your farm, not the least. And so within the constraints of rotations and what kind of crops can be grown on each piece of land, you make your decision to grow with those which will potentially give you the best optimal return. At the consumer side, you have competition for the attention of consumers. You have people who can move demand to a certain extent between commodities, between types within a class, like between green peas, yellow peas, India between Desi-type chickpeas to yellow peas, sometimes even lentils, sometimes other types of dry edible beans. They grow a type of pigeon pea. They can substitute lentils. So you have all of this movement. And what the buyers are looking at, as much as you want to maximize your returns for the land, the consumers want to minimize their cost. So you have them looking for the most effective cost combination. In livestock rations, it's most clear they have least cost rations. And it's the same idea throughout the consumption chain, where buyers are trying to minimize their costs, you're trying to maximize your return. The net result is that things tend to move together in groups. The other thing which will become clear is that individual commodities can break away within a group. So it's groups that you should look at, not each individual one sometimes. This is an interesting graph. This looks at the field crop price indexes, and this is versus crude oil. Crude oil is not indexed. This is just bent crude oil. The index for special crops is one that I maintain and I've created. It's a weighted index, so it adds different weight to the value of peas, the value of lentils, canary seed, and this is an export-based index. So all of these things are U.S. currency-based, which makes them currency comparable. But what you can see there very, very clearly is that they are moving in a band, and they do move together. This is really a good thing to know, because what it tells you is that you can look into the future and get a sense of what the direction ought to be for special crops in general, for pulses in general, not specifically for each type always, but it gives you an idea of where the overall trend will be. And that's very critical. When you're looking at futures markets, you can't look at, say, March or June of this year. You need to really look at new crop futures, because that's the next expression of opinion for the crop, and that's where you would focus on. If those are discounted, if corn is discounted, soybean is discounted, wheat is discounted to the spot market, to spot futures, then you should anticipate that special crop prices in general and pulses and lentils will probably want to trend lower because of the competition at the consumer end for their use. And also, if they get out of whack with each other, if something becomes too strong relative to the rest, production of that commodity will increase, supply increases, and that almost always pressures prices lower. This is an interesting one. I indexed the prices of lentils and yellow peas just for fun. And you can see that these are the two major components of the special crop price index. So as a group, it follows everything else, but these two individually pursue their own course throughout the year. This year, peas are doing much better. The index value of peas is strong. The index value of lentils is weak, and that's something that's very obvious in the markets. This is an interesting one. This is not indexed. This is just raw grower bids. For this, I used the number 2 grade. I felt that was probably in the long run the most representative grade if you had to pick one. I could have picked more, but it's already a very busy graph, and you wouldn't want to have 16 lines on there and try to get anything out of it. But again, you can see that lentils, not surprisingly, do move together as a group. Individual ones can escape from the group and go higher than the rest of them, or sometimes lower, depending on the supply and demand situation for that specific class. But it's worthy of note that they do move together. And again, it's the same thinking. If they're all following the major commodities and they follow each other, it gives you an idea. It allows you to come up with a sense of where the future will be for price. And this is the simplest part of the outlook, really, is acreage will be down this year, I believe. The numbers that I do, that for the supply demands that I did, is probably based on a higher acreage than people think is likely to happen. I started working on this in November, so I like to start with fairly conservative numbers and just try to come up with a sense of the trend, and then I start doing an analysis on that. If I feel the numbers are moving too much in a specific direction, I start adjusting them. So I may not always capture the feeling at the moment when I do this, but my objective is not to capture the feeling at the moment, it's try to express where it probably will end up to help you get a better sense of where the market potential is likely to be. World lentil production will be down again this year. It's been trending down for the last couple of years. Canada, of course, is a fairly big part of that. Production in the other category, which includes India and a variety of countries, is not changing a whole lot. Some of the more difficult ones to figure out are Turkey. I think every year there's a hope their production will go up over what it was the previous year, but they keep having problems which hold it back. Production in the United States has been trending up recently, sort of steady, and probably will go up this coming year. This is clear in when you look at the numbers for world lentil production. Canada is the largest export producer of lentils in the world, and probably the largest individual producing country. Basically, I've said before, when it comes to lentils, when Canada sneezes, the world lentil market catches a cold. One of the changes, though, that's taking place is the other production that's going on in the world, even though it's probably going to be down, or could be down this coming year, is happening in places that are also exporters. So we're losing a certain percentage of our demand to competition from countries like Argentina, potentially lentils being grown in Russia and places like that. The United States, obviously, where production should come back this coming year. And that to me is that's strategic demand loss. Like even if it's 10% or 5%, that's probably affects the cream of the market for us, and it just adds to our ending stocks. And that's the real problem with it for us. But when you have periods of high prices, which we've had in lentils, you do have a reaction from around the world. It attracts the interests of farmers elsewhere because they want to maximize returns to their land just like you do. And it's the same, they become excited by it, so they'll grow it. I think the good news is that I think when it comes to lentils, Canada is probably sets the quality more or less for lentils, and the other ones are kind of following us, and their production is not always the same, and they have to be discounted. The problem with that is that even though they need to fetch a discount, our buyers will tend to use that against us. And if we have weak-willed people or people who need to do business, that can really strongly influence their eagerness to try to negotiate harder, and that may affect the price. Canadian lentil production, acreage will be down in total. Red lentil acreage will be down more than green, and this is reflected in here. I decided in this whole presentation, I haven't gone with acreage predictions. I just thought I'd just cut to the chase and look at production predictions instead, and look at the tonnages. And I think it's, that's what the market really pays attention to in the end. When they talk about acreage, people are thinking, well, what's the average yield? And then they calculate a production estimate. So we'll just cut out the step. Lentil production this year is probably close to the 5-year average, which has had a couple of very big years in it, is what I expect. But it's probably, the feeling I get here is that it will actually be below this, that red lentil acreage will fall farther than I've been thinking. Green lentils could be down a little bit more than I'm thinking. So there's room for adjustment down in this. Maybe it gets down as low as 1 million tons. I don't know. But the lower the market believes it's going to get, the example I would use is if the market thought you were going to reduce red lentil area by, say, 50% or 60%, I would think that sometime in February or March you would begin to see a price response to that, and that may help draw land back into the crop and increase acreage. And that gets to be, as I said, that's what I try to think about when I do these things, is how will the market respond to what people are thinking now, where might we actually end up? I wish I was always right. I usually get the direction right, but the final number is we always have to wait till December of each year, and there can be a bit of a discrepancy between what I thought and what StatsCan thought, but that's okay. The green lentil outlook, ending stocks, I see them declining over the coming year. The stocks to use ratio declining, which is a positive thing for price. With the green lentils in general and with the red lentils, though, the amount of domestic consumption for them, I think that's an area that is controversial. Some of the farmers I've been talking to say that in their areas there's been a lot of the sample grade product that was grown in 2010 has been sold for livestock feed. To the extent that that's happening around the province, then the domestic consumption number will rise from this and the ending stocks will go down. As for the exports, I feel fairly comfortable with the export projections. The year started off fairly decently, and well, it's been busy the first part of the year, and that's good. And I think we'll get there. This is the history for green lentil prices. You can see that it has been rising up, and we were actually at the upper end of our recent trend. When I look at this is one of the reasons I don't think green lentil acreage, even though it should go down, because returns aren't as competitive with canola, with durum, with wheat, with peas as they have historically been, and that should pull acres out of it. I think that it won't be a run, people aren't going to run away from green lentils. What that suggests to me is that the average price in the coming year will probably be lower than it has been this past season. And so I don't like to go to specific numbers, but I would anticipate lower average prices. Kevin's going to ask me by what percentage, and I'm going to say I have no idea. I did this for red lentils as well, and this to me is the most interesting thing that I've done. And I've always wanted to do this with color, and I euphemistically call this a heat chart. What I've done is I've calculated the monthly average price, the grower bid, and taken that as a percentage of the annual average grower bid. And so each month being a percentage, some are at the high, are above the average for the year, and some are below the average for the year. So the green is high and the red is low. And you can see that in the case of green lentils, there's been long periods of low. But what's really interesting about this chart is two things. One is it tells you you cannot time when you're going to market lentils reliably based on past experience. I think what's going on with the movement of the colors in there is that what's happening is people are looking at what happened in the previous 2 or 3 years, which I think for most people is history, and they're applying it to their current thinking. The net effect is that when prices were strong for a couple of years, people are holding lentils off of the market and selling them at that point, and that lowers the price because there's more product available to the market than there is demand. The other parts of the year, what they're doing is they're withholding lentils, or they've run out of them, and that's pulling up the price because there isn't enough product available to the market to meet demand, to meet the short-term needs of the market, whether from processors or new buying. So it's an interesting thing. It almost suggests that if you're, for a year or two you can follow history, and then maybe you need to think a little contrarily, and that may work better. I don't know. These are dangerous things to use. They may not succeed for you, but I think it gives a good indication. It also tells you that there isn't strong seasonality in price. The red lentil outlook. Again, the big controversy for me is the amount of domestic consumption. If domestic consumption is higher because the sample grade and the bad number 3s and bad extra 3s from 2010 are being sold as livestock feed, then the ending stock number is going to be a lot lower than that, and that's really positive. When I look at red lentils, the starting bids for next year are probably comparable or a little bit lower than the spot market bids today for red lentils, which is why people don't want to grow them. The implication is that I think that red lentil prices on average will be higher next season than they were this season. There are things in the world that could happen that could make that not possible, but it looks like that will likely be the case. And again, with red lentils being so poor, our competitors aren't going to be excited to grow them. They would probably rather grow greens. And again, this is the red lentil price chart. You can see historically red lentils have spent most of their time under 20 cents a pound. So the numbers that we're getting to right now are actually more to the norm. We've gone through a few periods here of anomalous price behavior of red lentils where they've been extremely strong for a variety of factors, external factors, demand factors, production problems in 1 year in China and 1 year in India, the next year in Turkey. And these were events that really helped lift up red lentil markets for a couple of years. Again, this is the heat chart that I did for greens, and I did the same thing for reds, and you can see the same anomalous behavior. One of the things I have a feeling that the 2011 price chart, 2011-12 price chart, the growing season we're in right now, will be somewhat similar to the one for the previous season. However, there is a chance that later in the year things could improve, and I think there's a high probability things will improve, because if there's pessimism about acreage for next year, then many buyers in some countries are going to want to buy what's available from this year, and also there's going to be Ramadan demand before the end of our crop year, and even how much of that we get depends on how much Turkey's taking. But Turkey, I think, will continue as an importer of lentils from Canada. They do reprocess them, and they sell them into the Middle Eastern markets. And I think it's a good thing that things like that happen, because those people the Turkish traders are better at those markets in many cases than we are, and it's fine to let other people do business that they're good at, and we do the business that we're good at, which is producing the world's finest lentils. Conclusion, so simple. Lower lentil acreage in 2012, a bigger decline on reds than on greens. Prices, red lentils prices, I think, should be higher next year on average than they were this year. And that improvement in market will express in the export markets. That could help demand at the end of the last quarter of the current marketing year, say after seeding is complete, it may be positive to price at that time, and it may be positive demand if buyers see a decline in acreage. And with 14 seconds to go, and I'm told I cannot finish early, so I need to mutter on for 10 seconds, but I don't know what more to say, so I'm just going to turn it back to Kevin. Thank you very much.